Hi there. If you're a contractor with multiple income sources, your tax code may not be correct.
Are you a contractor trying to juggle a few different income streams? Ever look at your PAYE tax code and just feel completely puzzled? Worried you might be overpaying, or worse, heading for a surprise tax bill you really don't need? Well, you are definitely not alone. Welcome to this explainer from my tax accountant, where today we are going to demystify the 2026 tax landscape for contractors just like you.
So let's just paint a quick picture. Meet Chloe. She's a brilliant freelance graphic designer, and she's pulling in a pretty decent income from her projects. But she also has a part-time job at an agency, which means she's on the PAYE system. And to top it all off, she's also a landlord renting out a small flat. Every single year, it's the same old story. A tax code that looks like a secret message, that nagging feeling she might be overpaying, and that constant little fear of a big tax bill landing on her doormat. Sound a bit familiar? Now, Chloe's story is super common, but in 2026, the plot really thickens. You see, we're at this critical point where stagnant tax thresholds are about to collide with a brand new era of digital tax reporting. And this isn't just about avoiding a bit of paperwork. Getting this wrong could have a really significant direct impact on your bank account. So how are we going to get a handle on all this? Right, here's our game plan. We'll kick things off by understanding the big picture tax challenges for 2026. Then we'll dive right into the nitty-gritty of frozen allowances and what they actually mean for your pocket. We'll crack the code, literally, on your PAYE tax code, and then we'll get really practical with how to manage that mixed income. And to wrap it all up, we'll get you ready for the digital tax revolution and leave you with a clear, actionable plan. Let's get into it. Okay, first up, the 2026 tax challenge. There are two key phrases you really need to get your head around this year: fiscal drag and what we're calling the triple lock of compliance. These are the big economic and administrative pressures that are reshaping the tax landscape for every single contractor in the UK. So, what on earth is this fiscal drag? Well, think of it like a silent current that's slowly pulling you out into deeper water. The tax brackets are like lines drawn in the sand, right? But as the tide of inflation and pay rises pushes your income up, you get dragged, slowly but surely, into higher tax territory. And the result? You end up paying more tax, even if your actual spending power hasn't really changed one bit. It's basically a stealth tax increase, and it's the defining feature of this tax year. And that brings us perfectly to the engine driving this fiscal drag: frozen allowances. Let's look at the actual numbers so we can see how this all plays out and what it really means for your wallet. £12,570. Remember this number. It's right at the heart of the issue. This is your tax-free personal allowance, and for the 2026-27 tax year, it is set in stone. This figure has been frozen for what feels like an age, nearly a decade, and with every year that passes, its real-world value is just being eaten away by inflation. And here is where it really hits home. Have a look at the tax bands for England, Wales, and Northern Ireland. With that £12,570 allowance frozen in time, and the other thresholds also staying put, any little pay rise or a new client you take on could be the thing that shoves you over that £50,270 higher rate threshold probably a lot sooner than you think. Now, for our viewers up in Scotland, the situation is, well, it's even more complex. The Scottish government sets its own bands and rates, which has created this 6-tier system. You can see right away that the higher rate kicks in much, much earlier, at just over £31,000, and the rates themselves are higher too, topping out at a whopping 48%. This just adds another layer of complexity that contractors really need to be aware of. Right, so we've looked at the numbers, but how does HMRC actually translate those into the tax you pay every month? That's where your PAYE tax code comes in. Think of it as the instruction manual that tells your employer exactly how much tax to deduct. And if you're juggling multiple jobs, getting that code right is absolutely non-negotiable. Okay, the most common tax code you're going to see is 1257L, and it's actually pretty simple to break down. The number, 1257, is just your personal allowance, £12,570, with the last digit knocked off. Simple. The letter L just confirms you're entitled to the standard tax-free allowance. If you have one job and your tax affairs are pretty straightforward, this is the code you should be seeing on your payslip. But what if your code isn't 1257L? Don't panic. The letters tell a story. BR means all your income from that job is taxed at the basic rate. That's pretty common for a second job. D0 is the same idea, but at the higher rate. A K code, though, that's a red flag. It means you've got untaxed income that's actually more than your allowance, and HMRC is clawing it back. If you see a K code, you need to get in touch with them right away to find out why.
And if you're on a W-1 or M1 code, that's an emergency code, and you really need to get it sorted out fast to avoid overpaying tax. Okay, so this brings us to the absolute core of the issue for contractors like Chloe. How does the system actually handle tax when you've got a PAYE salary, freelance profits, and maybe some rental income all at once? It's not as simple as just taxing each one separately, I'm afraid. So here's how it all works. First, HMRC basically gathers up all your income from every single source and chucks it into one big pot. Then, and this is the absolute key takeaway, you only get one tax-free personal allowance of £12,570. HMRC will usually apply this to what it considers your main job, which is usually the one that pays the most. And that means any income you get from your other jobs is taxed from the very first pound. That's why you'll often see that BR or D0 code on the payslip for those jobs. Now, here's a pro tip that could save you a serious amount of cash. Let's say you've got 2 part-time jobs, and neither one of them on its own earns you more than that £12,570 allowance. Well, the default system might still tax your second job as if you're earning loads, which means you'll massively overpay. The solution? You have to pick up the phone, call HMRC, and ask them to split your allowance across both jobs. They won't do this automatically, so it's really up to you to take action and keep more of your hard-earned money. Okay, we've tackled the numbers. Now let's talk about the process. The other massive change coming in 2026 is a complete overhaul of how we report our taxes. It's called Making Tax Digital, and it is set to absolutely transform the self-assessment system as we know it. So what exactly is Making Tax Digital for income tax, or MTD for ITSA, as you'll see it called? Well, in the simplest terms, it is the end of the annual tax return as we know it for many self-employed people and landlords. It moves tax reporting from being a once-a-year headache to a continuous digital process. And this is when it all kicks in. From April 2026, if your qualifying income is over £50,000, you have to join MTD. Now, pay really close attention to that term, qualifying income. It only includes your gross turnover from your self-employment and any property rental. It does not include your PAYE salary. So, for example, if you earn £40,000 from freelancing and £30,000 from a PAYE job, your qualifying income is only £40,000, and you wouldn't need to join until April 2027. You see, Making Tax Digital isn't just about getting new software. It's about a whole new way of thinking about your taxes. First, you'll have to go digital with your record keeping, using approved software. Second, you'll be checking in with HMRC every single quarter to give them a snapshot of your income and expenses. And finally, you'll still need to do a final wrap-up at the end of the year. It's a big shift from a once-a-year scramble to a more regular, streamlined process. And for anyone feeling a little bit anxious about this big shift, here's an important piece of information. HMRC has confirmed there will be a soft landing for the first year. What that means is, for 2026/27, they won't slap you with penalties if you're late submitting your quarterly updates. But, and this is really important, penalties for paying your tax bill late will still apply as normal, so don't get caught out. Phew, we have covered a lot of ground, everything from fiscal drag to digital disruption. So let's bring it all together into a clear, actionable plan. Here are 6 practical steps every contractor with mixed income should take before the new tax year kicks off. All right, let's get you ready for action. Here is your 2026 checklist. First, get a crystal clear picture of all your income streams. Second, don't wait. Log into your HMRC account and check your tax code today. Third, make sure your 1257L allowance is working for you on your main job. Fourth, do the maths on your qualifying income to figure out if MTD is on your horizon. Fifth, if it is, start looking at your software options now. And finally, and this is the big one, remember you are not alone in this. If you're feeling unsure about any of it, reach out for professional advice. A little bit of planning now will save you a world of stress later on. Now, before we finish up, it's really important for us to state our disclaimer. The information we've provided here is for general guidance only. Tax rules can and do change, and they really depend on your individual circumstances. So you should always consult a qualified professional for advice that's tailored specifically to you. The 2026 tax year is coming, and yes, it's bringing a lot of change. But with the right knowledge and a proactive approach, you can not only navigate these changes, but actually thrive in them. So, as we wrap up, I'll leave you with this question. Are you ready to take control of your taxes and build a more secure financial future? If you need a partner on that journey, we're here to help at My Tax Accountant. Thanks so much for watching, and don't forget to subscribe for more insights that will empower you on your financial journey.